Let's dive into Ethereum today and are whales starting to inject capital into the network. We'll break it all down for you. My name is Paul Barron. Welcome back in. But when you look at digital asset treasuries, if you kind of look at the chart right here in terms of these big yellow bubbles right there, those are acquisition points. And we continue to see acquisitions occurring within the asset treasuries. You guys have seen the ETH reserve ranking right there. We're going to get of course, BTCS on the show today, but you can kind of see it. Bitmain leading the pack there. BTS holding the number 6. So we thought, let's get Charles in from BTCS to kind of break down what's happening in the markets. Charles, welcome back in. Thanks for coming in.
Yeah, Paul, thanks for having me back. It's great to be on the show.
So let's go into a couple of points I want to hit on. One thing that you guys put out this tweet over the weekend, while not material, on Saturday, BTCS picked up another $1.5 million in ETH. In the $3,800 range. So goodbye for you guys. And DeFi continues to perform. So Aave was still doing great. Uniswap running 24/7, meaning you've got access. These are the kind of things that happen throughout these weekends. First of all, why do you think we were seeing both institutional companies like yourself on the digital asset treasury groups really going all in a time where I think a lot of traders were very, very spooked by what happened over the weekend?
I mean, I think you'll always have that issue of traders trading, right? They're going to trade the short-term, volatility of a market. And so we have a very long-term view on Ethereum. We're very bullish on what it's going to do to change the way digital assets are moved on a global scale. And so when we see a market crash, I mean, that's the best time to buy, right? There's always that expression, like when you're getting stock advice from like the hot dog vendor in New York City, it's the time to sell. Yeah. When everybody else is selling, it's the time to buy. So we saw that kind of flash crash on Friday. Unfortunately, I was at dinner with the family, so we couldn't, pull the trigger and do anything that night. But, we started the discussion and, on Saturday we had, picked up, another $1.5 million of ETH. And what was great is we were able to do that on DeFi. So had we been using traditional exchanges, it was, if it was TradFi, we wouldn't have been able to do that. And so we were able to capture that, that it was close to the bottom as we possibly could.
Well, and I think you hit it right here on this tweet. We saw the market flash crash. You guys remaining rock solid. We are well over collateralized with zero liquidation. So that's another advantage that you've got in terms of how you guys are playing this market, which I think is a good benefit to a lot of the people who hold BTCS. When you look at institutions right now, Charles, and you kind of compare this, I'll go to the ETH ETF tracker, and these outflows that we've started to see. Now, typically what has happened after these massive outflows, we have started to see the price of ETH start to track back up again. So this is perfect timing, or it appears to be perfect timing for companies like yourself and others to really pack in a lot of opportunity of buying these dips. Is this a typical strategy that you guys are implementing?
It is, and we have kind of two strategies, right? We have a $50 million buyback in place, so we're buying back shares when the stock dips, and we have, when we see opportunity on the east side, we're going to do the same. And so I think it's very natural that when there's a flash crash or there's uncertainty, people panic sell, and that creates a great opportunity, right? When everybody is chasing the highs and there's fear of missing out and buying, that's typically when it's a great time to kind of take a pause and say, okay, well, what is my valuation? Is this the right timing to institute a move?
Right. Well, you can kind of see it right here. This is the total Ethereum spot ETF net inflow outflow. These are the outflows that happen, and then we see these bounces right here. So coming off that, boom, then we see the ETH price start to move up, which I think is kind of in line with what you guys are trying to do from a strategy standpoint. When you look at ETF holders versus asset treasury holders, why do you think, because this seems like a completely different audience now, like you're marketing to different people. Kind of give me the breakdown of the two.
I think so. I mean, I think, ETFs, one, are just targeting holding that underline. And so there's a lot of the investors in an ETF maybe arbitraging that against a digital asset treasury company. I've spoken to larger institutions that are actually doing that and saying, well, okay, if a company that doesn't have much operations and all it does is hold, let's say, ETH, they can sell that short and buy the ETF as and arbitrage it. So I think in the public markets, there's a lot that's going to go on that is not as simple as the price going up or down, or I'm buying low and selling high. It's much more complex. And so, I mean, that's why I created an opportunity over the weekend where, traditional markets are closed and we're able to go in there and use DeFi and borrow and increase our exposure to ETH. And it seems like it was a pretty good call based on, where ETH is, after the long weekend, right? It's back up in the 4,000 range. I think it got up to close to 4,500. Now I haven't looked at the moment, but it was definitely a good opportunity.
Yeah. Well, I think, when we see the markets doing what they are right now, and I think a lot of people were in the position where if they could get into this dip, this was a great benefit. And I think the key here is watching how the markets respond now from here going forward. You look at the news, you put out this statement right here, big news from SharpLink Gaming. They announced tokenization of SBET. They're doing it the right way, your claim here, unlike if you look at something of what's happening over on Ondo, which puts a lot more economic pressure on this around ownership. Explain to our audience why this is a good move doing it this way. I know you guys are obviously in this direction as well.
Yeah, we already did this, right? We did this not on Superstate. We did this on Upstream. So it was a platform that tokenized our stock on Ethereum's blockchain. I think it was like 3 years ago. And it's a very lengthy process to get. It's a very, very hard process, right? You've got to get liquidity and you've got to get companies on board these platforms. So I think overall, tokenizing stock in the right way, and it's very important, the right way, where you're actually a record holder and you actually own those securities, it is extremely fundamental in reforming how the capital markets work. I think tokenizing stock in the wrong way, and I would put that as, going and getting the shares from a brokerage firm and then tokenizing those where you can have fractional shares and nobody knows who owns what because the company issues the shares, it goes to Seed & Co. and then it goes to the brokers, and it's just a legal representation of ownership through a chain that keeps adding layers and layers on top of, which is how you end up with phantom shares and all these issues in the market. So I'm super excited when someone, an entity like SharpLink comes out and says, hey, we're going to do this and we're going to do it the right way. We're going to do it on a platform where you actually have direct ownership of those shares. It's something we did in the past. We're not going to pioneer it again. We're going to let other people take the arrows and make it work. And if they do a good job at it, we'll follow suit. But it's definitely something I'm excited to see happen, especially on Ethereum's blockchain.
Do you think that this solves the stock lending problem, when you're dealing with real ownership of that stock applying to the tokenization process right now?
It should. I mean, the issue you have right now, and this is one of the reasons why we did the Bividend, is if you own stock in, let's say, our company, your broker can and will loan it out without notifying you, without paying you, and so someone can bet against you. And then they pool all those shares together on a lending desk, and then institutions can go to that lending desk, borrow those shares, and bet against the fundamental investor. So if you tokenize those securities and you put them on a blockchain, you have the ability to eliminate that issue. You also don't have market makers that can print fake shares that don't exist. It's like selling the title to a house you don't own. Yeah. So it eliminates all of those issues. It's a much harder model to start from scratch and get into the market. And that's why I worry that the tokenization of stocks through brokerage firms is really a toxic thing for the capital markets, because now you've got a brokerage firm which could be lending your shares, which could be printing fake ones, which market makers do. They basically invent fake shares and sell them, assuming they have the assumption that they're going to be able to rebuy those, right? It's called market. And in any other business, it's fraud. In the stock market, it's legal.
It's legal, yeah.
And so if now they can loan or make up shares or give shares to in a tokenized form on a platform that's a layer below that, it's just piling on what is already a bad system. So it's using blockchain technology to propagate and make a system that's already bad worse, versus saying, hey, this technology can completely rewrite how we do things, and let's use that in the correct way.
Yeah. I think the strategies that you guys have taken, of course, this will be interesting, especially around the Bividend. I was also looking at your tweet here. When you had the Bividend issued, how many people took advantage of this? Let me kind of zoom in on that.
We haven't put that out yet, but it's in terms of total number of shares. I mean, if you exclude management, it's material.
Wow.
And we actually already paid the Bividend, which is great. I mean, it took a little longer to reconcile some of the documents than we thought, but that got paid out last week. So we had set a payment date of on or before October 17th. Yep. If you are Now, if you're getting cash, that's going to go out on the payment date. We've actually already paid it. It goes to DTCC, and they're going to give it to the brokers, and the brokers are going to go pay it to the shareholders, whoever they may be, at that time. And so, if you took cash, you'll get it on October 17th, and if you're short the stock, you'll pay it on October 17th.
All right. And if you took ETH, is the same date, I'm assuming?
We didn't pay it the same day. We did it sometime last week.
Okay. All right.
But it was fast, right? I mean, it was processed. It took an hour to process.
Right.
It was just a question of making sure we had all of the documents in place that people had opted in. So right now, and if you look at our business on the capital market side, we did the Bividend. We've got a $50 million buyback. On the operational side, I think that's where we really want to provide investors with, phenomenal exposure to ETH and beyond. And I say and beyond because we do more than just hold ETH. We have an operating business where we're a block builder. We represent anywhere between 1% to 3% of all transactions that land on ETH with our block builder, and that includes all the L2s. That's a growing business. It was 80% of our revenue in the last quarter. It was a huge driver in last year for our revenue. So we think that that's a core function. So we have our validator operations, which is basically staking with higher yield because we do it ourselves. We have our block builder, which is high revenue and revenue growth. And we're looking at other ways we can generate revenue within the Ethereum ecosystem, because it really, unlike Bitcoin, Ethereum is it's a digital economy, and you can build businesses within it. And so that's what we're really looking at doing is like, how do we expand beyond just, hey, we're a validator node operator and we're a block builder and we're also doing these other things. And we've spent a lot of time researching that. A lot of it's built. We're just trying to figure out the accounting, which we like to get the accounting right before we jump in. I think a lot of these DATs have started to jump into things that they don't understand on the accounting side, and they're going to pay the price later. But that's kind of how we see ourselves moving forward.
Okay, so you look at this flash crash, you compare how retail and traditional traders dealt with this versus institutional. Did this not really have much of an impact, do you feel, on the institutional side? And this was just another opportunity for institutions to buy into this?
It depends on the institutions. If they were levered, yeah. I mean, I think there was $180 million of Aave that was loans on Aave that were liquidated, which is great that whole ecosystem and DeFi lending protocol held up and didn't break. I think there was issues with Binance, if I recall, where
there was. In
that flash crash, they had issues. And that really speaks to how powerful DeFi is. But back to your original questions, for institutions, if they're, properly invested and have the right, risk management procedures and policies in place, I don't think it really made much of a difference at all.
When you look at the Ethereum price right now, some adjustment now, do you feel like this is a $4,500 ETH first or a $3,500 ETH first? Where do you see this price going?
I mean, I think I'd like to believe it's a 4,500, but again, I'm biased. I'm bullish on ETH. I'm bullish on blockchain. So we'll see. It wouldn't shock me if it dropped back down. I mean, these things happen. The market goes up and down. I think the better question is, where is it going to be at the end of the year? Where is it going to be a year from now? And where is it going to be 2-3 years from now? And that's where I'm most bullish, not really what happens.
When you look at the kind of investor that you guys are I won't say profiling, but attracting, do you feel like they are in a position where they are looking at this long term like most ETH holders? Or do you feel like, hey, no, this is kind of the slot that we're looking at for short and interim burst on investing in the stock market, and this just is our play on crypto?
Well, I love all long-term fundamental investors that believe in the business and having a mix of retail and institutional, because I think that's the perfect balance. The reality is that doesn't exist. If you're a public company, anyone can go buy your stock. And we have a lot of short-term investors that look on a day-to-day basis. We have investors that are buying the stock and selling covered calls. We have all sorts of investors. I get emails from investors or messages on DM. Well, they're looking at the technical analysis. And as far as investors go, I mean, I think it is a public company. You get what you get, and you do your best to try to rope in and get fundamental investors that believe in the story and management where you're taking the company. Yeah,
for sure. I'm looking back at this tweet. I was surprised at how many people think that the market is bullish right now. This, of course, happened. We put this out on the 13th, just yesterday afternoon, and whether it was bullish or bearish, and then we saw the pullback. So I think a lot of the market is still very, very bullish on where it's going from here, especially into the Clarity Act potentially, and a couple of rate cuts that still are going to play into this. Do you feel like that's going to change any of your business? Rate cuts, Clarity Act, again, more positive nature for DeFi and obviously crypto overall.
Well, I would break it into two categories. So rate cuts is just general macroeconomic effects. It'll affect not really our business, but probably our stock, just like any other stock.
Yeah.
The Clarity Act, I think, is really big because it's going to touch on DeFi. We'll see where that goes. My recollection of where it left off is it's in the Senate. There's some changes that may not be great. It's obviously going to go back to the House. Congress is going to have to come to a consensus on what it will be, and then get that to the president for signature. So I think that could be one of the biggest catalysts, especially if it comes out with positive regulation for DeFi, where it could really drive the price, right? That could be something where you could see a 25, 50, 100% price increase based on having positive regulation in the market, so that we can start seeing adoption. When that occurs, who knows, right? Like, we've got a government shutdown. When things pick back up and get back on track, we'll see.
Yeah, for sure. Listen, you guys should keep a track on the Strategic ETH Reserve listing right there. You'll see BTCS holding in right there. Check them out. Learn a little bit more. And if you're getting into digital asset treasuries, which seems to be one of the biggest things I'm getting questions on, is I think retail is also waking up to this now, going, wait a minute, this is kind of like MicroStrategy, and they kind of know what that is from a Bitcoin stance, but they're learning about it here on Ethereum. So, Charles, it's been great having you on today. Thank you so much. We'll keep a close eye on what's happening over at BTCS. Appreciate it.
All right, thanks so much.
You bet. All right, you guys, if you're not in our Diamond Circle, that's a place where you guys can get additional content from us. And we do an email out there every week. There's just an update on the markets, kind of where I see where this trends and where trends are going. So all you have to do is just hit the link down below. It's free to get in. And of course, catch me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.